Okay, you can start the recording. Okay. Um, Good day, guys. Good evening, good day, good morning. I hope everyone is well and that you are looking forward to the financial accounting to a module. Yeah, my name is Listen Timire, as displayed on the screen there. And this is actually the first recording where that we are actually introducing financial accounting to A. So just a bit of background. My name, like I said, is Listen Timire, and I am going to be your financial accounting to a lecturer or tutor. So yeah, I finished my university in basically 2021. That's when I finished my honors in accounting, and now I'm doing my final year of articles. Hopefully, by the end of this year, I would actually be, a qualified CA. So I am very excited and happy to be introducing financial accounting to A. Like, it's one of my favorite modules, one of my favorite subjects, even in school. So basically, guys, what I need to just like stress here that I can't even, or if you want to major in accounting in the future or even finance, it is important that at the very beginning, like in your second year, like as we are doing a financial accounting today, we lay the foundation and we lay the principles and the concepts that governs financial accounting. Like, and you it's a financial accounting. This would actually make your life easier as you progress with your academic journey, and especially as you will be going to do like your honors and all the articles there if you are interested in becoming a chartered accountant one day. So this is one of my favorite modules, like I said, because basically first and foremost, I am aspiring to be a CA myself. So I'm just gonna, without wasting so much time, I just want to jump basically into introducing the concepts of that we are going to cover in financial accounting 2A. So guys, these topics that we are gonna cover, they are as per your, a module guide, things that you are actually expected to cover during this first semester. So having said that, let me just jump right into the content that we are going to cover throughout the course. So guys, the first underlying thing that governs actually the preparation of financials is your conceptual framework, and it actually, and the financial reporting standards like IS1 or something. And then actually in this, unit one, guys, what would basically be doing is to introduce concept like, definitions of items that you are going to see pulling through into your financial statements. You need to be able to identify what is an asset from a given scenario. You need to be able to identify an expense. You need to be able to identify the recognition criteria of all these different items throughout the financial reporting or throughout the financial accounting course. So this is the basis, guys, for actually preparing your financial statements. The basis is that you are able to understand what qualitative information needs to be in the financial statement. You need to understand, like, how to actually classify, items or transactions that happens within business environment, that would actually be assets or liabilities, income in the financial statements. So this basis is important even in the future, even in your future years, because this is basically every standard that comes after that would actually be in conjunction with the conceptual framework board, because everything to be recognized in our financial statements has to be either an asset, a liability, expense, income, or even your equity. So it's important to understand these things. And this is where in unit 1 that like we are going to introduce those concepts. And then if in unit 2, guys, we're just basically going to cover like, you know, the basis for the preparation basically of financial statements. You need to be understanding like what is the structure of an income statement, for example, what needs to get into the income statement, what are considerations that we need to take into account in order to actually you have a proper income statement or balance sheet or cash flow or settlement of changes in equity that actually complies with the requirements of the applicable financial reporting framework. In this case, our IFRS that you would need to actually be able to understand and actually to do well when it comes to like presentation of financial statements. Many people understand they, you know, actually struggle with this aspect, especially when it comes to preparation of statement of changes in equity, and especially when you're thinking about like, you know, the cash flows from that perspective. But we are going to unpack these in our videos that particularly relate to unit 2. So yeah, and then in the third unit, guys, we are basically going to cover the revenue. Revenue, guys, you know, every business, as you understand, gets it actually runs on the basis that they will produce enough revenue or enough revenue that will actually be able to cover their operating expenses and then their operating costs. So basically, we need to understand when is the business entitled to actually recognize the revenue in their financial statements. This is a very delicate thing, because basically many companies, they find themselves in a position where they want to overstate this. Maybe for some reason they want to recognize revenue basically before maybe it accrues to them or something, or maybe for the purpose of getting some approvals at the banks, for the purpose of getting bonuses. So this is an area that is interesting, that will introduce the 5-step model and other aspects that actually are around the recognition of revenue itself. So we need to understand the basic underlying principles that governs the recognition of revenue. And then from that perspective, guys, like, you know, the underlying basic principle that we will we will focus most of our attention will actually be on the revenue recognition itself, because like, you know, that's where, you know, all the interesting stuff comes from. And then if you understand the basics of revenue, guys, it will be easier for you to actually, you know, navigate revenue, even when we introduce advanced concepts in future years. If that, you know, the foundation that you would have set from this perspective is the one that actually would make your life easier. So it is important, guys, that like, you know, you pay special attention to this particular unit when we introduce it in a video, that like, you know, when we actually are unpacking you know, the principles that are actually governing the revenue recognition itself. So yeah, from that perspective, guys, I'm going to move on to unit 4, which are inventories, guys. Like basically you understand that inventories, guys, it generally applies in a most of the time, let's say retail or manufacturing entities, obviously is produced by the entity, which means like you are a manufacturer, where would you have different kinds of inventories, like, you know, a work in progress inventory, like you know, your raw materials, and then they will also find themselves with like finished goods inventory. But then if you go to a retail entity, for example, the Checkers, you would find that most of their inventory will basically be the finished goods inventory. So we will introduce the principle. This is actually governed by IAS 2, and then we will actually unpack the principles that governs the inventory recognition itself. Obviously, we need to know how like the inventory is carried. We need to know, like, you know, the principles relating to impairment of inventory, you know, and we need to unpack those and understand and actually separate it and define it so that people understand the difference between like, you know, the impairment of inventory under IAS2 and then like, you know, the IAS36 impairment. But then basically, from that perspective, we just need to understand that inventory as a standard has got its own principles that govern the inventory recognition, inventory like carrying amount, and then also subsequent measurement. So we will unpack that as we go through, you know, the unit. So having said that, I think I'm just gonna jump to the introduction of unit 5, which is income taxes, guys. This is a very interesting subject, especially in financial accounting, where we need to actually have a comparison between like the module and then we have like the perspective from an accounting perspective. Obviously, we understand, guys, that income tax basically, you know, is governed by the taxation by the act itself. And then we understand that we have different kinds of taxes. Basically, the first type of tax, and we understand that it's VAT, but VAT for what it's worth. Most of our transactions in accounting, we actually account them excluding VAT. But then the income tax implications of these transactions is very critical, actually, because in our financial statements, we're supposed to show actually the income tax or that relates to the current tax that the company would have incurred, actually, and the deferred tax that would actually come into play. But we will focus more on the principles that are actually applicable at your level. But it is important to pay special attention actually in the videos that will actually be uncovering unit 5, so that like, you know, when you go into the future, you understand the link between taxation and accounting from the income tax perspective. And from that perspective, you know, it is important that like, you know, you guys pay special attention videos, so that like you can lay the foundation for the introduction of bigger concepts like deferred tax into the future. Yeah, so we're gonna move to unit 6. Unit 6, guys, we're basically going to unpack property, plant, and equipment. We need to be able to identify whether something is a PPE, whether something is investment property, something is an intangible asset. We need to be able to identify a PPE item from the given assets, guys. So we'll actually basically be introducing the definition of property, plant, and equipment, and what also, like from that perspective, we're gonna introduce from the subsequent measurement perspective, we're gonna introduce the principle of impairment, actually, that we are going to talk about in detail in the future, actually. But what is important to understand is that, like, you know, when we talk about property, plant, and equipment, the most important thing, guys, is to understand and to be able to actually differentiate that from investment properties, and also to actually be able to identify property, plant, and equipment, and actually to be able to know actually the initial recognition and subsequent recognition. From that perspective, we should be able to identify how to account for, you know, major inspections, how to account for, you know, like major improvements to a proper plant and equipment and stuff. So we need to be able to understand, to unpack actually how the subsequent measurement of proper plant and equipment is done. But like, yeah, this is a fairly easy subject. So I would just like need people, if you pay special attention to this unit, actually it will cover most of the principles that you ever want to know from when it comes to IAS16 property, plant, and equipment. Okay, so and then in this unit, guys, in this you know, module, our final unit that we're going to cover is the presentation in the financial statements. But then this unit 7, guys, that we're talking about presentation is different to unit 2 from the perspective of that, like, you know, in unit 7, basically, we are more concerned about the analysis itself. So I think from that perspective, if you look into your start guide, it says unit 7, presentation of financial statements. But like, you know, I would think this is more likely or more leaning towards being analysis of financial statements, where we will actually, guys, unpack the information that would have been presented in financial statements, and then unpack it actually to be able to understand and actually to have meaning to the users of the financial statements. Because to begin with, guys, the preparation of financial statements only is to serve the users actually to understand the financial position, or like, the financial performance and the cash flows that would have arisen during the financial period. And that information, the users get them through analysis of that financial information. So therefore, the introduction that we are going to give here will be the introduction to the analysis of actually the financial statements themselves. When you are given a set of financial statements, you need to be able to draw some meaningful conclusions, some meaningful insight that, like, is actually presented in those financial statements, and the meaningful insight that could be used to make decisions by the users of those financial statements. So yeah, so in unit 7, guys, it's important because it is one of the usefulness of actually the financial statements, so that the users can actually be able to draw some based on those financial statements. So therefore, being able to do an analysis is a sign that you can critically think. So it is actually important, guys, that, like, when you're thinking about the analysis of financial statement, that you pay special attention, that you never go wrong from that perspective, because it's fairly simple, but it needs you to be able to understand and apply. So that's what we are going to be unpacking in Unit 7. So guys, just to conclude on that, it is important, guys, that, like, we are actually paying special attention to each subsequent video that is going to be recorded, because, like, these foundations that we're going to be setting in this module, we are going to need them into the future. We are going to need the foundation as we go into our future years, and actually to make your life easier tomorrow if you pay your special attention today. Actually, as I was doing my university, like, I've always believed that a person passes a module in the first few weeks, or a person passes actually the degree in the first year of learning, because that's where you lay your foundation. And at this stage of laying foundation, this is the critically important stage that you never want to miss the basic principles that governs the subjects that you are going to be actually focusing on in the future. Because having that basic principle, having that foundation, will serve as the basis for you to actually, do well into the future as you aspire to focus on a particular subject. Like, especially if you feel like you want to focus on financial accounting, or you want to be a CA someday, or you want to follow the financial management route, or the taxation route, in any actually an other subject that you guys are going to do or are going to want to focus on, you will still need to know the basics and the foundation of accounting for you to do well, or to make your life easier. So it is fundamentally important, it is critically important that we are able to actually follow, that we follow a step-by-step process to understanding all these units that are actually the basic principles and the basic concepts that actually governs financial accounting. So having said that, guys, I'm hoping to be interacting with you into the future. I'm hoping to actually see you guys, and we share some important insights as we move. So thank you so much, guys. I think, having said that, I can say have a good day, have a good night, and we'll talk again in the next videos. Thank you.